कि इस कॉन्क्लेव की थीम है द इंडिया मोमेंट.
Even as Prime Minister Narendra Modi was assuring the nation that country's banking system was healthy from the stage at the India Today conclave, hectic negotiations were underway in Switzerland and the rest of Europe to save one of the biggest and the most famous global banks, Credit Suisse. The 167-year-old Swiss was finally snapped by rival UBS for 3 billion Swiss francs, a 99% fall from the bank's value at its peak in 2007. As part of a deal struck with the Swiss government, the Swiss Central Bank and the country's regulators, UBS will absorb 5 billion francs in losses. It will, however, receive 100 billion francs in liquidity assistance from the Swiss Central Bank.
So yes, we are seeing something that is unusual and that indicates serious concern on the part of the Swiss government for the impact the possibility that there could be an uncontrolled collapse of the institution and the impact that that might have on the financial system. And of course, that would have been a concern that would be shared not just by Swiss authorities, who have long been concerned about the financial stability of the two largest banks because they are very large relative to the size of the Swiss economy.
Veteran banker and Kotak Mahindra Bank CEO Uday Kotak pointed out the fall in grace for Credit Suisse in an early morning tweet. He said the Credit Suisse sale of UBS at a discount of 60% along with a write-off of 81 bonds worth $17 billion was a signal for all bankers and stakeholders on what happens when the risk-return matrix is overtaken by obsession with size. Meanwhile, a report by Kotak Institutional Securities says it stays positive on Indian banks and does not see any material negative impact from the worsening financial condition of several mid-sized banks in Europe and the US. According to the report, India has seen much lower increase in bond yields and interest rates, and Indian banks are vastly different versus troubled US banks in several important aspects. The Kotak report adds the rapid deterioration in the financial condition of mid-sized banks in Europe and the US was due to three major reasons. 1. Large bond portfolios relative to the size of balance sheets. 2. Concentrated wholesale deposits. And 3. High concentration of long-duration bonds in the bond portfolio, none of which are an issue with Indian banks. The RBI, meanwhile, is keeping a close watch on the health of Indian banks.
Looking at the whole thing from outside, all that I want to say is that particularly one of the banks, the deposit growth was excessive, but the credit did not grow correspondingly, and the excess money was invested in certain bonds, both government bonds as well as other private sector bonds. Now there it is necessary to do a proper risk assessment. These investments were made when the interest rates were low. So therefore it is necessary, again I am saying that I do not know whether this was done or not done in the United States, so I am not commenting on that at all, but this situation needs a careful understanding and introspection.
Meanwhile, there are few who believe the banking crisis has blown over. Markets, at least, are expecting more turbulence, which is being reflected in bourses all over the world. Analysts also expect the pace of interest rate hikes to slow, given the stress banks are in across the world. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.